Welcome back. I'm Pratap here. Today is the 25th September 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you click on the tab posts, or some of you might be seeing the tab community. Whichever the tab you see, you click on the tab, then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist to supply demand zone price action course. You have all the training lessons are available. So far we have completed 25 training lessons and we have released 66 videos, and you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video, we will be providing an update in that channel, or any other important updates also we will provide at our Telegram channel. Now let's get into the analysis discussion. Yesterday we identified 8 high liquidity zones from daily and 75 minutes time frame. And we got good number of trades today. The first one is Balakrishna Industries. It is a 75 minutes high liquidity zone. So this is the zone identified by our software. So this is a rally candle, ERC candle, failed ERC candle as a leg-in. Then we have 3 base candles and then a drop candle. And this one we need to fine tune with 15 minutes time frame. Unfortunately, there is no proper 15 minutes zone is available here. Already prices reached. Even earlier also, there is no proper price structure here to create a zone. Even in the recent price action also, there is no proper price structure. Even 5 minutes also, you look into this 5 minutes, we don't have any 5 minute zone also available. But who is resistancing this price movement? There is a huge resistance here. Who is doing that? Somebody is controlling this price. Who is that? That is nothing but 1 minute high liquidity zone. I'm changing the time frame to the 1 minutes. Here you look into the 1 minutes. There is a 1 minute zone. You have a rally, 3 base candles, and then a drop candle. This 1 minute zone is controlling the prices, is holding the prices, not letting the prices move away. That means there is a very strong order flow is there in this zone. See, the first time, how it pushed the prices. Second time, third time, fourth time, fifth time, sixth time, it's not. Again it pushed the prices. Again seventh time, again sixth or seventh, again it pushed the prices. So that is the reason why we can plan an aggressive trade on this 1 minute zone. What is aggressive trade? It is not a fine-tuned zone. But based on some price action clues, it should support, or even it can be a high liquidity zone that can be planned as an aggressive trade. Without any fine-tuned zone, the high liquidity, lower time frame high liquidity zone, directly you can take the trade. How long you can take? Until it is violated. As many trades it supports, you keep on taking. One day it will fail, because every high liquidity zone will be having an expiry date. That day it will be violated. Until then, take all the trades and enjoy the profits. See, today also it entered into this zone. Morning 9:16 candle, it gave you the trade. In case if you miss the trade, again it gave you an opportunity at morning 9:25 minutes candle. In case anybody missed in 9:16, still we got another trade opportunity. Third time also very close, but you need to keep at least some 5 paisa buffer or 10 paisa buffer, but this is a clean trade. Morning 9:26, market is settled. Definitely you would have taken a trade, and after that see how sharply market is down, and finally it reached the 15 minutes target zone. This is the 15 minute zone. We have a drop candle, we have two base candles, and then a rally candle. Multiple times this zone is also supported. Here it's supported. Here also it picked up, again moved up. Here also it picked up the orders, moved up. Here also it picked up the orders and moved up. And finally it is violated today. That is a different story. But before that, it reached the target. Or maybe some of you might have used a 1 minute trailing stop loss. Or some of you might be thinking, this is a ERC candle, two base candles, rally candle, that way you treat, you might have exited here. That possibility is also there. But those who used 1 minute trailing stop loss, you would have captured the move, because all these 1 minute zones are not violated. So finally here drop, base, drop, this is violated here. Probably you might have exited here. Or those who are using a 5 minutes trailing stop loss, you would have captured until this 15 minute zone, because none of the 5 minute zones are violated. Drop, base, drop. After that again this ERC candle, and then drop, again base candles drop. This is also not violated. And then again you have a rally candle, base candles, and a drop candle not violated. You may ask a question, can't we draw a zone here? No, this is the ERC candle, and leg out structures also not good here. And finally here drop, base, drop, drop, base, drop with hidden body you can consider. Then it could be a maybe valid leg out if you add the hidden body. Follow through candle. Finally reached the 15 minutes target. Here you would have exited. This is the way. Some of you would have got profit up to this blue color line, those who used 1 minute trailing stop loss. Those who used 5 minutes trailing stop loss, you would have captured till here. But this is the opportunity it has given. A great opportunity today this stock has given. How much profit Balakrishna Industries has given? Let me open the Excel sheet. Balakrishna Industries has given 29,820 rupees profit, which is 16.7% ROI. This is a 1 minute high liquidity zone aggressive trade inside this 75 minute zone. This much opportunity the stock has given. This is a clear opportunity, but where you exited, that is all depending on your exit criteria. But opportunity has given this much. Depending on your techniques, exit criteria techniques, maybe you might have exited earlier or you might have captured up to here. That is a different story. But the opportunity, the maximum opportunity it has given is 16.7% ROI. This is the maximum opportunity it has given. Next one is the ZNFC. This is also a 75 minutes high liquidity zone. And this is the 75 minute zone. This is the drop candle at the hidden body. So drop, two base candles and drop. This is the base candle. Next, the medium size leg candle is also part of the base, and then drop candle. This is what our software identified. How I fine-tuned this zone? With 15 minutes time frame, I have identified a drop, base, drop here, exactly at the proximal line, near the proximal line. And there again I fine tuned with 5 minutes time frame. So I consider this as a leg in, base candle, and then drop candle. Actually you can also drop 2 base candles and drop. This is also possible, drop 2 base candles. But the reason why I fine tuned here is this is where the movement has started. So according to my experience, this is the area institutional order flow will be there. The price movement initiated from here. So that is the way. And this zone already tested. It gave a very good test previously. Look into this candle. And after that there is a move. When it happened? Yesterday. Yesterday this trade was executed. So it is no more a fresh zone. So we can't plan a trade. See, today it is easily violated. After that there is no more order flow. See, look into the 5 minute structure. Everything is a very bad structure. Because no leg out candles are here. So there are higher chances this zone will be violated. But a little above, I identified a high liquidity zone which could be acting as a bull trap. We have a rally base drop, strong order flow is there. From here prices are moving down, again it reached and moving down, and recently also it reached. Actually for trade plan point of view, minimized the risk, but actually if you draw week to week, you see again it picked up the orders and came down. The actual order flow is from this zone. And this is the immediately available 5 minute zone, just above this zone. There are higher chances that this zone will be acting as a either high liquidity zone, and also it will be acting as a bull trap also. Institutions can use this supply zone as a bull trap. Because the 75 minute zone is violated, all the people who are trading, who are taking trades on the 75 minute zones, all their stop losses will execute, and then immediately they go for long orders. While they go for long orders, because to cover the short trades, they should go for long trades. Because stop loss is hit, all these people wants to exit by taking long trade. Long trades means bulls. All these bulls are captured by this supply zone. That's why it is called as a bull trap. I already explained this concept in lesson 21. Bull trap and bear traps. See today what happened. Okay, let me make it type 2 proximal, because this is the where, because to minimize the risk point of view. So today once again it reached, and see how sharply the rejection. This is acting as a very strong zone. It is having a very strong institutional order flow. And today it is acted as a bull trap. And also it is a high liquidity zone. And finally, where is the 15 minute zone? Here 15 minute zone. We have a drop candle. Why drop candle? You add the hidden body. If you add the hidden body, some more body will be added here. This is a drop, base, rally. So this 15 minute zone it reached. And when we got the trade today at 9:30, 15 minutes candle. If you go to the 5 minutes, we got the trade at 9:20 candle. We got the trade at 5 minutes candle and reached the target at 12:40 candle. And how much profit ZNFC has given? It has given 21,775 rupees profit. And based on one futures margin cost, the ROI is 9.7%. So this is a 5 minutes bull trap above 75 minutes HLQ supply zone. And also remember, this 5 minutes bull trap is also a high liquidity zone. A 5 minutes high liquidity zone. A possible high liquidity, because several times it tested the zone. So this is about ZNFC. Next one is Hindustan Copper. This is also a 75 minutes high liquidity supply zone. at 75 minutes time frame. So this is the ERC candle, maybe a rally candle we can consider, failed ERC, because prices are moving up from this bottom. That way we are assuming. So 1, 2, 3, 4 base candles and then a drop candle. And when this zone was created on 10th July 2024. And this one I fine tuned with the 15 minutes time frame. So in the 15 minutes we have a rally, 3 base candles and then a drop candle. Rally, base, drop. This is the 15 minutes fine tuned zone. Again within this 15 minutes fine tuned zone, again identified a fresh fine tuned 5 minute zone. See here we have a rally, we have a base candle and then we have a drop candle. Rally, base, drop. And here we have the order flow, institutional order flow. Here we are planning a trade. But above that I have drawn a blue color. Have you noticed? This blue color line is a stop buffer after adding stop buffer. And this stock is having 30 paisa stop buffer. Added the 30 paisa stop buffer. It is 347.25 rupees after adding. So if it exceeds 347.25, then you need to exit the trade. And today we got the trade in this zone, but unfortunately the zone is pierced, but it did not cross the stop buffer. Here in this candle we got the trade. This is a morning 9:16 candle we got the trade. Let me shift to 1 minute time frame. Morning 9:15 candle, sorry, not 9:16, morning 9:15 candle itself. We got the trade, and then the zone is pierced. Even though it is pierced within the stop buffer, after that price sharply moved down and finally reached the 15 minutes target zone here. Let's go to the 15 minutes time frame. So here we have a rally, base, rally is there. This rally, base, rally. Maybe some of you may think, okay, can't we take a dry zone here? The reason is this is not a medium size candle. This is a large candle. See, this is a large candle, failed ERC candle. This is also a large candle. Almost the length of this candle is also same as the previous one. These are all the ERC candles. That's why we can't draw this target zone here. This is the valid target, rally, base, rally. Already tested multiple times this zone. This is the first time and today is second time. And here in this candle, it reached the target and we exited. Here we got the entry and here we got the exit. And in this candle, slightly it is pierced, but it is within the stop buffer. The price went up to 347.20, but stop buffer is 347.25 with 5 paisa, or maybe we should say 10 paisa. If it crossed another 10 paisa, we would have exited. So stop buffer protected this trade today. But I'm sure only few people in the cash segment only might have got this trade, because this is the morning 9:15 candle trade. Many people, especially futures or options trader, may not be trading in the 9:15, or maybe some people might be placing orders at 9:15. At the time if price reached and if a trade is executed, okay. But many of the people may not trade in the 9:15. 9:16 onwards maybe you place orders. That way you might have missed this trade. Because this zone is pierced, later on I don't think nobody would have dared to place an order in this candle, because earlier candle slightly pierced. So institutional order flow has gone here. But within the stop buffer area, institutions might have kept lot of order flow here. which was not visible on the charts. That's why there is a huge rejection and push at the prices. But anyway, if any of your trades executed at 9:15, you would have got a very good profit. Hindustan Copper, you would have got a profit 22,260 rupees profit, which is 6% ROA. And the next one is SRF. SRF is also a 75 minutes high liquidity supply zone. So we have a drop, 3 base candles, and then a drop candle, drop base drop. Drop base drop. This is the 75 minute zone. And this is fine tuned with 15 minutes time frame. So here you have a 15 minute zone drop, 3 base candles, and again add some hidden body. Some more body will be added to this candle. This is a drop candle, drop base drop, 15 minute zone. And from this zone it picked up the orders and came down. It has a fine tuned 5 minutes that we will see. And also one more zone is also here. We have a rally base drop is there. Some of you may think a drop base drop, this candle you keep inside the zone. This could be treated as a leg out and you can draw a zone, but this is a LOTL zone. Because it picked up the orders from this upper 15 minute zone and came down. I just ignored this order flow. If you want, you can also draw 2 LOTL zones you can drop, but many times when you combine LOTL zones, your risk management will be very high. So that is the reason why I didn't draw this drop, 3 base candles and drop. The main reason is this is looking like a high liquidity 15 minute zone. Because multiple times it is tested. It is tested once a year, the 15 minute zone. Again it is tested. Again it is tested. And today again it is tested. So in high liquidity zones, what happens many times? Same zone again. High liquidity zones will act as a LOTL zones. Because LOTL zones mostly will be created in high liquidity zones. It pick up the orders from the upper zone, supply zone, and a new zone will be created. Who is the reason for the creation of this new zone? The upper zone, the LOTL concept, level on the top of the level. That way you will see the overlap. When you combine both the zones, again risk management will be problem. That is the reason. Because of these reasons, many times what I do, I always believe on the upper zones, not the lower zones, which picked up the orders from the upper zone and created. Generally, I don't believe those zones. Sometimes they work, but risk management is difficult. Even if the risk management is managed, many times those zones will be violated. Rarely they will work. That's why the actual order flow you need to identify. That is the origin. This is the origin here. This is the origin for this entire high liquidity zone. So because of these reasons, I didn't selected this one, because it is actually a result of picking the orders from this high liquidity zone. But this is a valid zone, rally base drop. And this again fine tuned with 5 minutes time frame. See here you have a rally base drop, a fine tuned 5 minute zone is there. And this fine tuned 5 minute zone is the origin for this entire 75 minute zone. See here in this candle, 75 minute zone actually picked up the orders. See the sharp rejection. Then this entire 75 minutes high liquidity zone is created. This 5 minute zone is the source for the creation of this entire 75 minutes high liquidity zone. That means the real order flow is in this fine tuned 5 minute zone. If prices are entering in this area, we should not miss it. We have to utilize it. Definitely that will give a good trade. Okay, apart from that, one more 15-minute zone also recently created one. Inside we have a fine-tuned 5-minute zone. We have 1, 2, 3, 4 base candles and a drop candle. And today morning 9:15 candle, it reached this zone. Let me go to the 1-minute time frame. You will get clarity. It picked up the order, sharply came down. In the next candle, it reached the target. 9:15 candle, it gave the entry, and at 9:16 candle, it reached the target. But I am not sure how many of you got success in this trade. Okay, cash traders who keep pre-market orders, probably their trades would have been executed in this candle. If they added small buffer before this, definitely your trade might have been executed. Cash traders. But F&O traders, mostly before you place your order, the prices sharply might have come down, or maybe you might have avoided trades on the 9:15 candle. Either things will happen. So that's why F&O traders, this trades on the 9:15 is not really convenient. But cash traders who kept short trades, intraday traders, their order might have been executed. But many intraday traders, they don't keep pre-market orders, mainly because if any gap up or gap downs, if market is opened, many times your trades will hurt. They will be executed and immediately it will stop out. Everything happens in fraction of a second. That is the biggest risk. But anyway, the possibility, I am only seeing the possibility. If anybody trade is executed, how much profit you would have been, I am calculating. But actually, such kind of trades are 9:15 minutes candle. 9:16 is okay, but 9:15 candle is trades are really not practical as per my personal concern or personal opinion. But anyway, if any of your trades would have been executed, how much profit you would have got in 2 minutes? You would have got 7,743 rupees profit. It might have given you 4.8% ROI as per one futures margin cost. I calculated, but intraday point of view, intraday trades point of view, you need to calculate the ROI. Or if any of your before prices are entering, if your future trade 9:15, the moment market is opened, first 2-3 seconds you kept your trade. After that, your future trade is executed. And next minute it is reached the target and you exited the trade. That possibility is also there. But lot of luck should play. Morning before 9:15, few seconds you should place the order. In such kind of situation, futures trades also will execute. If anybody, your trade is executed, you might have got this profit. But really this is not that much practical, to be honest. After that, what happened? This zone is violated. After that, let us assume this trade is executed, this is violated. And now it reached into the, let me go to the 5 minutes time frame. Now it reached into our zone, the fine-tuned zone. This is the origin for the entire 75-minute zone creation. This 5-minute zone is the origin for this entire 75. And origin will be having a strong order flow. Your trade is executed. It is a very clean and neat trade, but it is executed at 1 o'clock 45 minutes. Almost 2 hours before market closing hours. And this is our target. 15 minutes target. Let me show you 15 minutes time frame. You have a drop, base, rally. But unfortunately, prices did not reach 15 minutes target. But if you look into 1 minute, see here, there is a huge support at this blue color line where I have drawn. That means somewhere here some strong order flow, which is not clearly visible in the 1 minute zone. Maybe in the tick wise some zones might be there. If you look into the tick wise data, that is second wise data, but we don't have access to such kind of data. We can assume by seeing this support, somewhere here some institutional order flow is very strong. See here, from here there are rejections, again rejection, moved up. From here again reached and moved up. And again slightly came below this, again moved up. That means near this blue color line, that order flow is there. Here you took the trade. Anyway, you can't exit here because you expect prices will go further. Second time again moved, lot of candles are moving near here. Again moved up, again came down, again moved up. At least at some point of time you have to realize you need to, at this blue color line, there is a strong order flow, probably you need to exit. Some orders are there, institutional strong orders are there in this area, which is not letting the prices to go down. Even if it go below blue color, it's a small movement only you have seen. Again prices were moving. That means a huge order flow might have been there. Let us assume maybe institutions from here to here in this candle, whatever the length is there, the entire length area, let us assume institutions might have kept a huge order flow at different time intervals. So that's why it is slowly consuming. See here, the blue color line consumed and went little below. After that again went below. Again moved up. Again next time see, again within this area. Maybe institutions might have again added order flow in this area again. So it's not letting. So you have to take a decision. At some point of time you need to exit at this blue color. Definitely not, this is the first time it reached. This is the second time it reached. Definitely you might not have taken. Moved up and again maybe in this candle you should take a decision. Or if not, again moved up and again came down in this candle, you have to take a decision. If you are intraday traders, probably here you have to take a decision. Cash traders, let us assume you are a cash trader. By at 2 o'clock 45 minutes, you need to exit your trades. If that is the case, you would have taken a decision here itself. This is 1436, 1437. Definitely you would have exited here. Or if you are a F&O traders, probably either here or here you would have taken, because market is going to close it in next 30 minutes. If you missed the last opportunity you got here in this candle, that is last 8 minutes of market closing. I am sure many of the people would have taken a decision in this area to exit the trade. So that's why I am considering this blue color area is the target. If you would have exited here, what is the profit you would have captured? Because today we didn't get an opportunity to get into this 15 minutes area. The reason is the market is nearing to the closing hours. When market is nearing to the closing hours, at some point of time, based on the price action, you should take a decision and exit. So if you exit at this blue color line, you would have got a profit of 5,737 rupees, which is 3.5% ROI as per one futures margin cost. So these are the trades executed today. So 4 stocks we got the trade opportunities, and remaining there are no trade opportunities, but let me show you how we fine tuned. First one is Jubilant Food. It is a daily high liquidity zone, and I am not concentrating on this zone because this is it's very slow. Data is not updating. Okay, this is 2022, 27 January 2022. In January 2022, 5 minutes data is not available. I fine-tuned up to 15 minutes time frame. All this we have several 15-minute zones are there, but anyway, I am not really getting into this because 5 minutes fine-tuned zones we can't fine-tune. So let's focus on the other stocks. But I have fine-tuned up to 15 minutes time frame. Next one is Lupin. This is also a daily high liquidity supply zone. This is the rally candle with hidden body. Rally, 2 base candles and a drop candle. You may ask a question, why I didn't fine tune? Because 15-minute structure, 75-minute structure may not be good. That is the reason why I didn't fine tune. What happened? All of a sudden trading view is slow. Let me refresh. So this is lupin. Okay, here we have a daily zone. We have a hidden body. If you add this is a leg-in, 2 base candles and a drop, and then fine-tuned with 75 minutes time frame. Okay, I have fine-tuned this zone. I'm sorry. Earlier trading view did not show these zones. Okay, there is a clear fine-tuned zone is there. So again we have a rally, 1, 2, 3, 4 base candles and a drop. This again fine-tuned with 15 minutes time frame. In the 15 minutes, so again we have drop, base, a drop, 15 minute zone is there. Inside again fine-tuned with 5 minutes time frame. So here this is the ERC candle as a leg-in. You have 3 base candles and a drop candle. And already this zone is tested. Prices also went deep inside. So probably planning again. Even type 3 proximal also it is tested. Type 3 proximal. So here, even if you want to plan some more trade in type 3, that is also tested. So that's why we didn't plan any trade in this zone, because there is no fresh fine-tuned zone. There are some 15 minute zone is there, but it is not a fine-tuned zone. That's why we didn't plan any trade here. Rally based drop is a 15, but it should be inside 75 minute zone, but there is no 75 minutes zone in this area. This is a drop candle. This is a rally candle, medium size rally candle, again a drop candle. In between no base candles. Such kind of zones will be violated easily. Okay, the next one is SBI Life. This is a 75 minute zone. SBI Life. Oh, sorry. SBI Life is also a daily zone, not 75 minutes. It is a daily zone. We have a rally, 1, 2, 3, 4 base candles and then a drop candle. This is fine-tuned with 75 minute zone. Here we have a drop, 2 base candles and a drop. And here we have a rally, base, drop. Drop, base, drop you cannot draw because this is already violated. Some of you may think drop, base, drop. Violated zones are invalid. You cannot keep them on your charts. I clearly explained in our training lessons. In the phase 1 training program, I clearly explained this point because I remember one of you asked this question recently. Why you didn't draw this such kind of zone? Violated zones are invalid. You cannot keep them on the charts. Next time frame is 15 minutes. See here, 15 minutes structure is very bad. There is no proper zones are available here. So that's why I didn't draw any 15 minute zones. There are higher chances this zone will be violated. What about here? Here we have a 15 minute zone, drop, 3 base candles and a drop candle. Next go to the 5 minutes time frame. 5 minutes time frame. Here structure is not good. See the lot of consolidation took place here. You have a drop, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 base candles and then drop candle. This zone will be violated. But above that there is a rally base drop is there. But this is not a fine-tuned zone. This is just above this zone. Why I have drawn this zone? The reason is all these candles you see here. This zone is not letting the prices entering into this area. Probably here a strong institutional order flow, even a little below also. So after that there is a rejection. Again they were moving, again they came. That way, based on this price action clue, maybe I am thinking there could be order flow is very strong, but still I have my own doubts whether really work or not. The reason is if the order flow is very strong, instead of multiple times holding the prices here, it would have gone well. That didn't happen. But there is another reason is also there. Maybe here supply is very strong, at the same time demand is also very strong. Until the consumption of the entire demand here, all these candles were moving within this area. There is a strong demand here, there is a strong supply here. Both are fighting, that resulted multiple candles. Still this zone is there. Probably there could be a strong order flow. Next time prices enter here, this zone may push the prices and it will work like an aggressive trade. That possibility. We have price action close. Generally price action close, strong rejection should be there. But here that strong rejection mechanism has not happened. That is the only drawback I am seeing in the analysis. But if anybody wants to go for type 2 proximal because the risk is very, very small, and if you want to plan a trade, even if it is violated, still it is okay for you, then you can plan a trade. Why I have drawn week to week? To let you know the rejections are near to this zone. After that, see the movement, very strong. Once the entire demand is consumed, now no more demand is available. Now the supply pushed the prices. That way we can say, we can give weightage to this 5-minute zone to plan the aggressive trade. But today, prices didn't enter into this zone. This has to be violated because there is no proper 15-minute structure within this zone. Okay, next, ABFRL. This is also very old zone, 75 minutes, almost year 2022, October 2022. You may not be having 5 minutes data, but still recent price action, prices went almost close to the distal line. It didn't cross the distal line, just 5 paisa before the distal line again came down. That way we can plan a trade by seeing any 15-minute zone, but unfortunately there is no 15-minute zones formed recently. See, rally candle, drop candle, in between no base candles. If that is the case, this zone will be violated easily. But anyway, today prices did not enter into this zone. And remaining stocks, 4 stocks we already discussed because they gave the trades. So this is about the HLQ analysis of the zones identified from the previous report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.